Investing in stocks can feel overwhelming, especially if you're just starting out. But let's break it down into simple steps. First, understand what stocks are. When you buy a stock, you're purchasing a small piece of a company. This means you can benefit from the company's growth and profits. Now, before you dive in, it's crucial to set your investment goals. Are you looking for short-term gains, or are you in it for the long haul? Knowing your goals will help you choose the right stocks and strategies. Next, educate yourself about the stock market. There are countless resources available, from books to online courses and even podcasts. Familiarize yourself with key terms like dividends, market capitalization, and PE ratios. The more you know, the more confident you'll feel when making decisions. Once you feel ready, it's time to open a brokerage account. Look for a platform that suits your needs. Some offer commission-free trades, while others provide research tools and educational resources. Make sure to compare fees and features before committing. Now let's talk about diversification. This is a fancy way of saying you shouldn't put all your eggs in one basket. By investing in a variety of stocks across different sectors, you can reduce your risk. Consider starting with exchange-traded funds or ETFs, which allow you to invest in a collection of stocks all at once. When you start picking individual stocks, do your homework. Look at the company's financial health, its competitive position, and market trends. Don't just follow the crowd. Make informed decisions based on research. Another essential tip is to think long-term. The stock market can be volatile, with prices fluctuating daily. Don't panic when you see your investments dip. Instead, focus on the bigger picture. Historically, the market has trended upward over time, so patience is key. Also, consider setting up automatic contributions to your investment account. This way, you're consistently investing without having to think about it. It's a great way to build wealth over time, especially if you take advantage of dollar-cost averaging. Finally, keep learning and stay updated. The market is always changing, and being informed will help you make better decisions. Follow financial news, join investment communities, and don't hesitate to ask questions. Investing in stocks is a journey, not a sprint. Embrace the process, stay disciplined, and remember that every investor started where you are now. With time and effort, you'll develop the skills and confidence to navigate the stock market successfully.